Hello there. Welcome back to Grade 10 Accounting. We're still working on a question paper from KwaZulu Natal. This is a Grade 10 question paper that we have here. If you go down the question paper, you see that this is for Accounting March 2020, and it's a common test. Very important. For those who want to download it, you can just use these specifics that we are on the front page here to look for it. Right, this is what we have. We can move on to our question. So today, this is the question that we want to look at. It's question 4 on that question paper, and it's on concepts and data ledger. And remember, this question is 15 marks, and it requires you to spend about 14 minutes on average on this question. Right? We'll start with 4.1, which is of concepts, and the question reads: choose the correct word or words from column B to match the description in column A. Write only the letter A to D next to its number 2.1.1 up to 2.1.4 in the answer book. So we have got column A that we are given, and then column B. So we are going to choose the most appropriate response that we have in column B, and then we are just going to attach the attachment that we have here. If it's A, we put A. So that's what we have. So I will start with the first explanation that we have. It reads the maximum amount of time a debtor is allowed to take to pay his debt. And we know that the maximum amount of time a debtor is allowed to take to pay his debt. Then we go to which is the most appropriate term there that is matching this explanation. We've got bad debts, credit limit, national credit card, and you know that credit term is the most appropriate there. A credit term outlines the maximum time that a debtor is allowed to take to pay his debt. And most businesses or most companies, they usually set their credit term on 30 days. That is, a debtor can pay before 30 days any amount owing. And if it overlaps those 30 days, it means it's going to attract some interests. The selling company will charge some interests on that debtor. It is a punishment for late payment or charges for late payments. So this is what we have. So you've got D as our first answer. So we can just go to our answer section and put D on 4.1.1. So we are here. So we can just write our D here. And then we go to 4.1.2. 4.1.2, you see that our 4.1.2 reads debtors written off who are not likely to settle their accounts. Remember, when we sell goods on credit as a business, the debtors, some of the debtors might not be able to pay their amount owing due to many reasons. Maybe they become bankrupt, meaning they are no longer have money to pay back the money, or they have left the country. It might be a reason. So we cannot find them, we cannot locate them. These are some of the reasons that we can have some debtors not able to pay back their amount dues. And whenever we have such a scenario, we have to write off the amount that is outstanding of that debtor, and we call that debtor a bad debt. So meaning that debtor is not able to pay back. So we saw the most appropriate term that is matching this explanation is A. We've got bad debt. So our 4.1.2, we are going to put our A there. So we are here, we put our A. So this is what we have. Then we got 4.1.3. We got 4.1.3. It reads the maximum amount of a debtor is allowed to buy goods on credit. You know that this is the credit limit, meaning a debtor cannot buy more than that amount. If it's 30,000 rands, it means you cannot buy more than 30,000 rands. This differs from one debtor to the other, depending on the income of each debtor. For example, that can determine the credit limit. The credit limit of that debtor. So this is what we have. So 4.1.3, we have got B. 4.1.3 there, we put our B there. So we can go to 4.1.4 and see what it reads. 4.1.4 is the next one. So on 4.1.4, it reads our policies and procedures aimed at controlling the granting of credit. Obviously, we have got one that is left there, which is the National Credit Act, and this also explains what we have in terms of 4.1.4. policies and procedures aimed at controlling the granting of credit. This is National Credit Act. It also, National Credit Act also regulates consumer credit and consumer information in South Africa. It also aims to promote fair and non-discriminatory access to credit. So this comes as explaining what are the roles of the National Credit Act. And so 4.1.4, we are going to put C. That's what we have there on 4.1.4. Here we have got C. So we are going to put our C there. So this is what we have. And then we go to the next one, which is 4.2, debtors ledger. Debtors ledger is the next one. And it reads, the following information was taken from the books of Gomo Stores for March 2020. Gomo Stores allows its debtors 30 days to pay. If a debtor is in arrears, interest of 6% per month is charged. So we can take note of the interest there, that it should be charged when the debtor takes more than 30 days without paying. So here we know that is 30 days. Very important to take note. So this is the credit term, is 30 days. So we go to the required part, prepare the debtors ledger account of M-Smart for the month of March 2020. And then we are given the information that we are given there. So we are going to go information by information and try to see how can we deal with it in terms of the double entry. Then the first one on balance at the beginning of the month, we have got 7,000. So it means this is the balance that we are starting with, and we are going to put it at the beginning of that debtors ledger. We are going to, and then we can take note of the date also. We are told that this is here. If we come here, we are told that this is March 2020. That's what we are having there. So this one represents our 1 March. 1 March. So that's the date that we are going to start with. And then the amount that we are having is 7,000. And this is going to be our balance PD at the beginning. So we go to our answer section. And this is what we have on our answer section. So our date, we are going to put it on the first column that we have there. So we are going to come here, and for our date, remember, we are saying 2020, 2020, and it's in March. It's in March there, and our March is 01, so we can just put our 01 here. So this is the date. Then there we are going to start with our balance. Our balance. Then our BT, obviously, we put it in the folio column. And then the amount, the balance, the amount of the balance, we are going to put it in the column of balance. We've got a column of balance that we have there, which is this one. So this is where we are going to put that amount, which is 7,000. So we have 7,000 here. And then we can go back there. We can go back there and try to check what's the next transaction that we are having. Right, on the next transaction, we are told that is on 5 now. On the 5th, sold goods on credit to M-Smart for 5,000, issued invoice number 101. Sold goods on credit to M-Smart. So we would want to know the double entry that is here on this transaction. So the double entry that we are having there is that when you sell goods, we have got the sales account. We have got the sales account that we are going to open. Sales account. And then also we see whether it's the goods are being sold on credit or they are being sold on cash basis. But here there's a specification that it's on credit. When it's on credit, we open the account of the name of the person that we are selling goods to. When it's on cash, we are opening the cash account. Or when we are using bank through check, we open the bank account. So in this case, it's on credit, so you're going to open the this one, the M-Smart account, and this represents the debtors control, because this one is the debtor. So we have got debtors control also there. Debtors control, and it's specifically for M Smart. For M Smart. So also we need to then we identify which account is being debited, which one is credited. But whenever we see a sales account, it means it's going to be credited. Sales accounts are always credited. So we know that whenever we are having a sales account, it's a credit. So it means here is a credit. And obviously this is a data now, and the data comes as an asset, and all assets have normal debit entries. So here we are debiting. So the account that we are concerned with is the debtors ledger. So this part is the one that we are concerned with. So we are going to debit the debtors control, which is this data ledger account of MSmart. We debit it with the amount that we are given there, which is 5,000. And obviously, this is invoice number 101. Invoice number. So this is what we are going to write on the details section. That is what is invoice number 101. So that's what we have. So we can go and put that one, and you can take note of the date also. The date is here, which is 05. Then we go there. We put that one. The date we are saying we are having is 05 here. And then here it's invoice number 101. Invoice number 101. And on the folio, we can put the books, the journal that we are taking this information. Remember, we can take this information from the debtors journal, and then on the amount, here. On the amount also, we have to check the actual amount that we are having there. So we can go back to check what amount we have in terms of this transaction on the 5th. The amount is 5,000. That's what we have. We can go back and enter that one, 5,000. And remember, we are debiting that amount. So we are putting it on the debit side. So this is our debit side. So we are putting the 5,000 there on the debit side here. 5,000. And then putting this 5,000 again, we now adjust with this balance on the balance section. When we debit here, we also adjust on this is the balance column that we are having. So whenever we debit, we are going to add to this balance, because we know this is a debtors ledger. So debtors ledger have no more debit balance. So when we debit, we add. Then when we credit here, we are going to subtract. So this is what is going to happen. So here we have debited. So you are going to say 7,000 plus 5,000. Then you get our 12,000. So this is what we have there. So we are going to put our 12,000 there. 12,000. Then we can go again to see what do we have next. Then we can go back there on the question and see what we have from there. We are now here on the 10th. I'd read received payment of 6,800 in full settlement of the amount owing on 1 March. Issued receipt number 4002. So receipt number 4002 is indicating that there's a payment that has been made of 6,800. So the amount that is being paid is that which is owing on 1 March. So 1 March is here. So this amount is the one that has been paid. But there's been 6,800 has been paid, but we've got 7,000 that is owing. So what does it mean? It means here we are saying 7,000 minus 6,800. There's a difference that is there of 200. So what is this now? It means this is a discount allowed. This is discount allowed. So we can bring down the double entry that is there when there's that payment. So what we are going to do is we are going to have two double entries that are going to be there. We are going to since it's a payment, remember when this person was owing, it was on the debit side. It was on the debit side because when we sold on credit, it went to the debit side of the debtors ledger. So now this person is paying, so it's now going to the credit to remove it, to remove the balance that is on the debit. So we have got our debtors our debtors control. We've got our debtors control that we have there. And then we also have our cash, if it's going to be paid by cash, our cash there. Then obviously our debtors control, we are saying we are not going to the opposite side, that is the credit, so that we remove the balance that's on the debit. So we are crediting now. Here we are crediting the debtors control. And then on the cash now we debit. We debit with 6,800. So we have got 6,800 that is there. So we also have another double entry. So this is the first double entry that we have concerning this transaction, because there's a discount that is there, and we are saying it's discount allowed. So we also have discount allowed that is there. We open a discount allowed account, and then we also we are going this discount also we are going to enter it in the debtors control. Remember, in the debtors control, we can just put it in this way. In the data, let's say this is the debtors control. We have got an amount of 7,000 that was on the debit side, and there is a payment that has been made. We are saying 6,800. So if you put 6,800 here on the credit side to remove this one, there's a 200 that is outstanding there. That 200 we are going to credit it again, and we're going to post it to discount allowed now, so that this 7,000 is removed. So you say 6,800 plus 200 is up to 7,000. So that's what we have. So we also have our discount allowed. So our discount allowed is an expense. We debit it, and all expenses we know that they are debited, and all income are credited. So we're going to debit here. We're going to debit here, and then let's just maybe change the color that we are having there. We are saying here on discount allowed we are debiting, and then we credit here, and the amount that we are is 200, and here 200, and here obviously we have 6,800. So that's what we are going to do. So the account the account that we are concerned with is debtors control here. So we are going to credit the debtors control 6,800, and we credit again the debtors control with 200 for discount. So this is what we have. So we can go back, go to the other section and enter that one. Remember, our debt is 10. Our debt is 10. And firstly, we have got that payment of the receipt, which is the receipt number. We are saying receipt number 4002. 4002, and this is coming. The journal that we have is the cash receipts journal. And then on the amount part, remember we said this data ledger, so we are crediting. So we have 6,800 that is there. So this is our first entry in terms of this transaction. Remember, we also have discount that we have to put there, right? Having done this now, we adjust again on the balance section. Remember, we said when we are crediting, we subtract. So we are now saying 12,000 minus 6,800, and the answer that you get there, you put it here, which is now 5,200. So you've got 5,200 here, right? So also have that discount of 200. So also enter that discount. It's discount allowed. Remember, we are saying now discount allowed, and this discount allowed is 200. So we are going to come here and put our 200 on the credit side again, like this, like what we have done there. If you go back just to reconfirm the double entry that is summarized there, remember here we credited data control with 200, and then we also credited here data control 6,800. So this 200 is the one which we are now entering there. So we go back there. Now, and then this one is credit again. So we're saying 5,200 minus 200. We are minusing here. So 5,200 minus 200 to get our 5,000. So we have got 5,000. Here's our balance. So this is what we have. So we go to the next transaction to see what we have. We go back there. We are here now. So the next transaction that we have here is now on 15. We are now on 15 here. So we are saying issued credit note number, call for 900 in respect of goods returned. So whenever a credit note is issued, there are goods that have been returned, and these are sales returns. They are sales returns, and they represent uh, the allowance, the debtor's allowance. So what we are saying is, when we sold these goods, we debited the debtor's control, but now they are being retained. So it means we are going to the opposite side. Now we are crediting the debtor's control so that we remove the goods from the debit side as balance, because these goods have been retained. These people are no longer owing us this amount because these goods have been retained. So we credit to remove those goods from the debtor's account. Right. So this is what we have. We are going to the credit side and enter this. And remember, this is on the 15th. This is on the 15th, and it's a credit note number 12. This is the description that we are going to put. So we go there. It's on the 15th, remember, and we said it's a credit note number 12. Credit note number credit note number 12, and we are taking this information from the journal of discount allowed journal. Discount allowed journal. This is the the journal that we record these returns. Discount allowed journal, and the amount is 900. We say we are crediting it, and this is the column for crediting 900. So on the balance part now, we are, remember, all those that we are crediting, we said we are subtracting. So we say again 5,000 here minus 900, and we are going to get 4,100 there. So here we've got 4,100. So this is what we have in terms of this adjustment. So we go to the next one. We are coming from 15. So we are going to 20. We are now on 20. We are here. The bank retained the check received on 10 March 2020 with the remark RD, which means fair to draw, which is a specification being insufficient funds, cancel the discount. So the check on 10 is this one of 6,800. But on this 6,800, there is a discount that we calculated there, which was 200. If you still remember, we said 7,000 minus 6,800, and there's also a discount of 200. So we need to reinstate this amount of 7,000 because the check was rejected. So what we do, remember, when we entered this 6,800, we can go back to the account that you are having there so that you can understand. When we entered this as a payment, we credited here 6,800. Means now we are going to the opposite side to reinstate it. We are going to put 6,800 back, and then the 200 again is going to come back so that the 7,000 comes back to the debit side since this payment was not processed. So this is what we have. And the date, remember, it's 20. We have got 20, and then this is coming from the bank statement. So here we can give a specification of bank statement, and the journal that we are taking the information from is the cash payments journal, and the amount is 6,800. 6,800. So what does it mean now? The amount, the amount is coming on the debit side. Remember, it was on the credit here, so we are coming to the opposite, which is the debit, which is this column. So we are now 6,800, and we said when we debit, we are adding. So we are now saying 4,100 plus 6,800. Then we get 10,900, which is going to come there. 10,900, and also this 200 we are supposed to put it there so that the 7,000 comes back to the debit side. So here this can come in the form of a journal voucher, and then the book of original entry, or the journal that we are taking the information from, is the general journal, and the amount is 200. And then we are adding again this 10,900 plus 200 to that we get the balance there, which is 11,100. So my space is exhausted all my space there. I think there's a space that I left there. So we go to the next and see what we have next on the we've got the last one, which is saying charged M Smart interest for 1 month to his opening balance. His opening balance is this one. This is the opening balance, which is 7,000, and they are saying they charged interest there. And we are told at the beginning of the question, remember I was saying, take note of this. We are told the interest of 6% is per month is charged. So it means we are going to use our 6% and we multiply by 7,000 to get the interest. So what are we doing there? We are now saying our interest 6%, 6%, we can, as a fraction, becomes 6/100. Then you multiply by 7,000 to get the amount that we have there. So when you multiply that one, you get 420. So this is interest that has been charged. So it means if it's an interest that has been charged, it means it's being charged on the balance, and the balance is on the debit side of the debtor's control, of the debtor's ledger. So if it's on the debit side, it means if it's an interest, is going to increase that balance that we're having on the debit side. So this 420 is going to come again on the debit and increase the balance that is there on the debit. It's an interest. So this is what we are going to enter. We're going to enter that amount of 420. Then we can take note maybe of the debts that we are going to enter there. The debt that is we are going to enter, you are given it here as 25, and this is also going to come in the form of a journal of voucher. It's going to come on the journal of voucher, and book of entry, original entry becomes the general journal again. So we come here. So I'm just going to write beneath that because I don't have space according to my space that I have there. So on the date, remember it's 25. And then on the details part here, remember it's going to come in the form of a journal voucher. And then the journal becomes the general journal, and the amount there we calculated this as 420, and we are saying it's coming on the debit, and when it's coming on the debit, it's a plus. Remember, it's a plus here. So what are we saying? We are saying 11,100 plus 420, and we get here the final balance that we are having there, which is 11,520. So guys, this is what we have in terms of the debtors ledger. And the first question that we had there of matching words, this is what we have according to this video. Thank you for listening. Those who haven't subscribed, please subscribe and share. We are still coming. We can stay notified so that we keep in touch with the videos that are upcoming. With that, we meet again in the next video, and I'm signing out.